Welcome to Inside India. I'm JP Ong, and here are your headlines. India's IT sector front and center after President Trump imposed hefty visa fees for new H-1B visas. India is expected to be the hardest hit, with Commerce Minister Piyush Goyal calling on Indian nationals abroad to return home to innovate as he visits Washington, D.C. today for trade talks. Prime Minister Modi is pushing for more self-reliance, telling citizens to use more made-in-India goods instead of foreign ones amid strained trade ties with the United States. And India's major GST reforms kick in today. That will see simpler and lower taxes for many essential goods in India's biggest tax overhaul in years. Good morning and happy Monday. We start off again as usual with taking a look at how Asian markets are setting the table for India today. And we are seeing so far that the Asian markets in today's session, we see the Nikkei 225 leading the charge once again, up by 1.5% and flirting at possibly testing new record highs. Fairly optimistic when you look at the likes of the South Korean Kospi up by 0.9% and the TAIEX also up by a similar clip. But a little bit sluggish for the Hang Seng Index today. They're starting out this Monday morning down by about 0.9%, while Shanghai is looking for its footing but trading flat to the upside at least. The Indian markets will come online in about 45 minutes, and we take a look at what Gift Nifty futures are indicating before the Monday opening. And the start of the new trading week out in Mumbai, we are seeing that Gift Nifty futures are still forecasting perhaps more gains today. They're trading about, I stand corrected there. It is actually foreshadowing about a 6-point intraday decline and could mean that that the Nifty 50 might be on track for 2 straight days of losses. This is after we saw the Nifty actually close in the red on Friday, so we might see some miniature or minuscule losses by the end of the day. But again, a lot of time really for traders to figure out which way they want to take equities and sentiment out in Mumbai. We're seeing the Indian rupee in today's session trading at about 88.09 against the US dollar, similar to the levels they were at Friday's close. Now, we expect a negative market reaction in some of India's largest IT firms after the United States made dramatic changes to its popular H-1B employment visa scheme. The changes include a huge rise in the cost of the visa, now costing $100,000, aimed at disincentivizing the employment of foreigners so companies hire American workers instead. Indian nationals were granted by far the highest proportion of H-1B visas last year. Amazon and other big tech firms used thousands of H-1B visas for their employees. Commerce Minister Piyush Goyal was among the first to react to the visa changes, suggesting in a speech posted on his X account that countries like the United States are a little afraid of our people's talents, calling on Indian nationals to return home instead to innovate, and that India would be a winner come what may. CNBC TV 18's Hormaz Fatakia joins us live from Mumbai with the details. Hormaz, of course, you have the opportunity to really listen to what people are saying on the ground, and this news perhaps just keeping us on our toes for the most of the weekend. Can you tell us about the reactions right now, and more details as to what this will mean for India, given it might be one of the latest in a number of sweeping changes that could alter India's own export and trade outlook?
Indeed, and there were plenty of developments, and once these developments first broke out over the weekend, there was a lot of uncertainty over the visa cost. Who does it apply to? Who doesn't it apply to? And when the Commerce Secretary Howard Lutnick was around with President Trump when he made the announcements, he mentioned the fact that it will be applicable per employee per year, and that created the panic among a lot of these H-1B visa holders. But the White House late last evening issued a very swift clarification saying the fact that this $100,000 fee will be applicable only to those petitions that are submitted after 12:01 a.m. Eastern Time after the September of 21st, and this will not be applicable to those who have already issued the petition or who have already hold the visa. They also mentioned that these fees are applicable for the 2026 H-1B lottery, which will be out in February of next year, and this fees is only a one-time submission and not a per year is what what the Commerce Secretary Howard Lutnick had earlier mentioned. And the new rules also do not prevent any holder of the current H-1B visa to not travel outside the United States. And the White House has also mentioned that these will also not be applicable to those who want to renew their existing visas. So this may have made it very clear that it will be applicable only to those who will be filing fresh petitions from today onwards, and also for those who will be part of the February 2026 lottery. The White House has also mentioned that additional reforms are currently being discussed and will be announced in the coming months. So as of now, the big Indian IT companies, the impact of that will be in focus going into today's trading session. But a lot of the smaller IT companies do have shared their opinions as to how that would impact their own business.
And Hormuz, what are these companies saying about how it might impact their business? Because the belief is that it's going to impact the U.S. tech companies to rely on Indian talent more. But is there going to be some blowback that they'll have to brace for?
We have yet to hear from the large IT companies, but at least 6 mid-sized and small-sized IT firms have come out with their views since late last night. And the one consensus among them is that it is going to be business as usual for them, and they do not see any material or very little impact on their financials going forward. They include the likes of Persistent Systems, Coforge, Emphasis, First Source Solutions, Cyient, and Sasken Technologies. And a lot of the analysts on the street have also come out with their views on this issue. BofA Securities is seeing an earnings per share EPS risk of 7 to 17% over the next 3 years, but they also say that this will be mitigated over a 3 to 5 year period. Jefferies is saying that this talent supply crunch could drive down profits of these IT companies by 4 to 13%. However, they mentioned that TCS and Infosys are best placed among the larger names, and Coforge remains the best placed among the mid-sized names. CLSA is also of the view that these new regulations will have minimal impact, as it is only applicable to the newer visa applications. They mentioned that LTI Mindtree and Persistent Systems are the 2 companies that could see the maximum impact. And lastly, Nomura is of the view that any sharp fall, in case you do see one in these IT companies in today's session, will be a good opportunity to accumulate these names. And at a worst case scenario, they see a 10 to 100 basis points impact on the margins of these IT companies. And Infosys, Cognizant, and Coforge feature among their top picks. So mid-sized IT says no significant impact. We are yet to hear from the larger names.
Hormuz Fatakia from CNBC TV 18 there with the latest on the H-1B visas and the possible impact on the very important IT sector there. Appreciate your insights and appreciate your news gathering in regards to this very important developing story. And this confusion over the H-1B visas also occurring at the same time as a landmark policy push from Prime Minister Narendra Modi, encouraging Indians to support local goods amid trade tariff uncertainty. This is by shifting buying habits towards domestic producers.
We are using many foreign goods in our day-to-day life, knowingly or unknowingly. We don't even know if the comb in our pocket is locally made or foreign made. We don't know. We also have to get rid of it. We will buy goods that are made in India.
Sajid Chinoy is the head of Asia Economics and chief India economist at JP Morgan. He joins us now from the sidelines of the JP Morgan India Investor Conference Summit. Sajid, thank you so much for joining us today. There's been a lot that's happened and transpired with regards to India. It seems that every week there's new news that could shape or alter the trade outlook and the economic outlook for India. Based on what you've heard over the last couple of weeks, from tariffs to GST to this new H-1B visa, how is this perhaps figuring into some of the conversations on the sidelines of the summit?
Well, as you said, there's a lot of movement in India, and I think the belief is that there have been some external headwinds that have built up in the last few months. These headwinds are both the prospect of a slowing global economy and the fact that India still faces very high tariffs from the US, and we heard on the weekend about the H-1B visas. But importantly, I think just on that narrow issue, we had a precedent in the pandemic before where you had Indian IT companies, for example, or multinational companies increasingly offshore. So even though efforts by the US may push up the relative cost of H-1B workers, and that may induce some firms to hire US nationals, it will lead to a broader, push, I think, towards greater offshoring, which has benefited India in the last few years in the form of strong service exports. Be that as it may, the external sector still does provide some headwinds. I think the hope in India is that you've got a number of domestic supports that have built up that could partially offset these, export headwinds. We've had, record low inflation this year. The year's going to end, the fiscal year is going to end with just 2.5% inflation. We've had a monetary easing cycle earlier that's playing through the system. The GST tax cuts kick in from today. We had direct tax cuts earlier in the year, and you had a very strong monsoon. So the hope is that all of these factors will reinforce some kind of consumption revival in the coming months and quarters, and that should at least partially offset some of the headwinds from the tariffs from the US. The hope, of course, is that we're back on the negotiating table and some trade deal with the US will eventually be reached.
So, Sachin, it seems again that this is a strong bet on the Indian consumer driving growth in India and offsetting the impact of the tariffs. I wonder what the net effect has been for or will be for the Indian economy, because on one hand you have these punitive tariffs that could hit the economy hard, but again the hope of that consumption to really offset that. Net, how has this altered your own outlook for Indian growth this year and the next?
Yeah. Well, it'll depend very much on how long the tariffs kick in. I think there has been some front loading of exports to the US. So if a trade deal is stuck in the next few weeks or the next couple of months, India could absorb that impact because there has been some front loading. These are, however, very labor intensive sectors, gems and jewelry, leather, textiles, footwear, shrimps. And so what you don't want are for these tariff headwinds to preserve for much longer, because then you worry about non-linearities kicking in, you worry about job losses and the knock-on effect on consumption. So the expectation and hope here is if in the next month or two we can conclude a trade deal with the US and at least bring Indian tariffs down to the levels that the rest of Asia experiences, so that there's no relative competitive disadvantage, then this would be a one-quarter story, and that the broader consumption pickup that I spoke about will dominate the effect. If the tariff headwinds continue for several quarters, then that has the prospect of not just impacting employment, consumption, but also animal spirits and investment more generally, which is why it's really important, I think, that we conclude this deal. Having said that, there's clearly an urgency to diversify trade. We've already had a trade deal with the UK. There are negotiations on with the EU. And the hope on shore is we'll conclude a deal with the EU, sometime before the end of this year. So India is trying to diversify its exports even as it negotiates with the US.
And as you try to negotiate or diversify your export outlook, that is, toward these free trade agreements, the U.S. trade deal, of course, is also still important. With Commerce Minister Piyush Goyal in Washington, D.C. right now, are you hopeful that a deal can be clinched? Because there are some clear red lines and clear differences that seem to be difficult, actually, to achieve consensus on or achieve agreement on, sir.
I am hopeful that a trade deal will eventually be struck. I think I'm very much the old school camp that trade is all about, a positive sum game. This is not a zero sum game. There are wins to be had on both sides. India is a large market, a market that's growing at 10, 11% every year in nominal terms. And so it's in the interest of the US for India to reduce some of its trade barriers, to enter this market, which, by the way, will also help Indian competitiveness down the line. At the same time, if India gets preferential trade access to labor-intensive sectors in the US that I just spoke about, textiles, gems and jewelry, leather, footwear, that is in India's interest as well. So I think there is a deal to be struck here, and I'm hopeful that this round of negotiations hopefully will be more fruitful.
Yeah, but with the recent news over the weekend with regards to those H-1B visas, does that complicate possible trade talks, and does that even add more problems for Commerce Minister Goyal to handle and to negotiate as he meets his counterparts in Washington, D.C.?
Well, it remains to be seen how important the H-1B visa is in the trade negotiations. But I think if you step back, the initial impact seems negative. Of course, the clarifications by the White House on the weekend clearly helped. This will only act prospectively, not retrospectively. This is a one-time fee, not an annual fee. So that, at the margin, makes it a little bit more palatable. But I think the broader issue here is, if you look at what research has found, is that whenever there are restrictions on H-1B visas, it just induces firms, multinational companies to offshore more vigorously. And that's exactly what we've seen in the pandemic. India has been a huge beneficiary of very strong service exports. JP Morgan is a classic case in point, where you've got these large global capability centers, back offices doing increasingly high-end work: research, legal, accounting, technology, engineering, cybersecurity, risk management, card structuring. So even though the H-1B visa may cause a hit in the near term, to the extent that it causes more multinational firms to offshore more broadly, India, as one of the recipients of that offshoring, will stand to benefit in the medium term.
In the short term, there might be a benefit there, Sajid, but on the long term, I'm sure you'll also take a note of the fact that there is a bill that's being passed through U.S. Congress with regards to a possible offshore tax, or a tax on business services offshored by American firms, that could hit the likes of JP Morgan, given you have huge outsourced services as well in India. Is there a concern that this very important sector in India could get hit by a double whammy of, on one hand, the H-1B visas impacting them, and on the other hand, in the long term, perhaps being impacted by these possible taxes on BPO services?
No, that's clearly a concern. And if you can even step back more broadly, that we've seen the world's largest economy, the US, first impose tariffs on goods, then we've seen curbs on lower skilled immigration. Now on the weekend, we're seeing taxes on higher skilled immigration. The concern very much is, what's next? Are services exports and offshoring going to be next? And I think that's a broader issue for all emerging markets, because if you look at the last 20 years, what you find is the lifeline and lifeblood of emerging markets like India, their growth has been very strong export growth. And so if you're in a world where you see much more protectionism emanating from the US, both in terms of tariffs and non-tariff barriers, and you're in a world in which that becomes a demonstration effect for other economies to follow suit, it's clearly a world in which emerging markets are going to struggle as far as exports are concerned. I would go further and say there's another challenge that many emerging markets face, and that is the excess capacity from China. Because on the one hand, you're facing a more protectionist world, which is going to create headwinds for export growth. But on the other hand, you've got a lot of excess capacity from China. And to the extent that China faces a 42% tariff from the US, the concern is that excess capacity will get redirected to other emerging markets, including in Asia. We've already seen this in the last 6 months. Asia, Latin America, North Africa, the Middle East. So now emerging markets have to both worry about how they grow their exports, but also play defense at home to prevent cheap Chinese imports from impeding their manufacturing bases. So yes, I mean, if you step back and look at the broader issue, the last 6 months, does create concerns for how emerging markets will grow in the coming years, and the need to diversify your growth drivers. You have to find new ways of growing in a global environment that's becoming increasingly protectionist.
Yeah. Stepping back also here, Sajid, because there is a strong belief that American tech companies will bear the brunt of the risks from these H-1B visa restrictions because of how dependent they are on the quality talent coming from India. But are there possible risks of, say, for the Indian tech or IT services sector? Because if we start to see a lot of these H-1B visa holders come back to India, as Minister Goyal wants them to do, will the industry be able to absorb them? Will this possibly push up wages or the cost of this talent, because they're coming from a higher cost base in the United States? Help us understand how this might alter the cost landscape for the Indian IT and tech sector, for better or worse.
Yeah. Well, I mean, IT companies typically have a 70-30 model, where 70% of their workers are offshore in India, for example, and 30% typically tend to be on the client side in the US. And so, to the extent that the relative cost of H-1B workers in the US has gone up, that should induce IT companies to move a larger fraction of workers offshore and maintain a fewer fraction either onshore or nearshoring in Mexico and Canada. But I think the point is, we've seen this in the pandemic before. When borders shut down in the pandemic, Indian IT companies did bring a much larger fraction of people offshore. And we saw that, in fact, that did not impact their competitiveness. It didn't stop them from growing. So I think there is a model that's already in place. And B, I would argue, ever since the first Trump administration, many Indian companies have already de-risked. The proportion of workers that are onshore in the US vis-a-vis what's offshore here has been much lower. So I think they have, at some level, been, prepared for eventualities like this. And I think have a business model that may well be able to cope with these new realities.
Sajid Chinoy from JP Morgan, appreciate the insights, and we will be coming back to you for your thoughts and input on if there are more developments that might impact India's trade and macroeconomic outlook. That's Sajid Chinoy from JP Morgan, the sidelines of the JP Morgan India Investor Summit. And a quick break on Inside India, but we'll leave you a quick look at what the Forex space is doing as the dollar index edges closer to that 98 level. We'll be back in about 2 minutes. Don't go away. Welcome back. And more developments in global trade now, with U.S. President Trump speaking to his Chinese counterpart, President Xi Jinping, on Friday, discussing everything from trade to TikTok. Elaine Yu has the details. Elaine, this was a very much anticipated and much awaited phone call between the two leaders. Tell us more about what they actually discussed when they finally got on the phone with each other.
Yes, good morning, JP. So TikTok was a big one. We still don't know the exact terms of the deal yet, but we do know some contours now, and it will buy more time and breathing room for both Washington and Beijing. But what was more concrete was that Trump said he'll meet Xi Jinping on the sidelines of the APEC summit in late October, and he also expects to visit China in the early part of next year, and that he also said Xi will go to the U.S. Later at an appropriate time. And Trump also said they talked about fentanyl and the Russian war in Ukraine. And Trump said he believes that Xi would like to see the war ended there. Now, back to TikTok. Trump said Xi approved the TikTok deal and that it's well on its way, with likely a formal signing involved later on. But let's take a listen at what who Trump said is involved on the deal on the U.S. side.
Larry Ellison's one of them. He's involved. He's a great guy. Michael Dell is involved. I hate to tell you this, but a man named Lachlan is involved. You know who Lachlan is? That's a very unusual name, Lachlan Murdoch.
Mr. Murdoch.
I believe, and you call him, and Rupert is probably going to be in the group. I think they're going to be in the group. couple of others, really great people, very prominent people.
So lots of big names there indeed. And as for Beijing, it said on its readout that the conversation was pragmatic, positive, and constructive. And it said recent talks reflected the spirit of equality and mutual benefit. But on TikTok, Beijing simply reiterated what it has previously said, which is that the Chinese government respects the wishes of the company and would be happy to see productive negotiations in keeping with market rules and a solution that complies with China's laws. Now, Bill Bishop, a prominent China watcher, calls this a win-win situation, this TikTok deal, a win for Trump for saving the app and also for Beijing for exporting this world-class technology. JP.
Yeah, this is such a fascinating thing to talk about and just one of the many important components of any talks between the United States and China. What else do we know about the future of TikTok, Elaine?
So all focus is really on the sensitive question about the algorithm here. And the White House says the U.S. will control the algorithm here. And who controls the tech was indeed for the U.S. At the center of its concern around data and privacy. But it's hard to say what controlling an algorithm really means. And the White House also says Oracle, which already provides computing for TikTok, will lead data and privacy for the new entity. Now, Beijing has previously suggested that the deal could involve some technology exports and licensing of its own IP rights, including algorithm. But if you look at ByteDance's statement in both Chinese and English, there's a small but notable difference there. In the English version, it says ByteDance will work in accordance with applicable laws. And in the Chinese version, it says it will work in accordance with Chinese law. So this goes to show just how geopolitically delicate this messaging is to the U.S. audience and to the one at home. But the White House press secretary Caroline Leavitt also said over the weekend that some of TikTok's largest investors would maintain their stake in the U.S. app and that ByteDance will bring in new American investors to reduce Chinese ownership to under 20% to satisfy U.S. laws, and that a new board for TikTok U.S. will have 7 seats, 6 of which will be held by Americans. But we really have to wait for more details to come out about exactly what the terms around the algorithm would be. JP.
So lots still to await, but perhaps some progress with regards to the TikTok deal, which is one of many components of this U.S.-China trade agreement that they're trying to at least get to hammering out or perhaps try to progress to. Elaine Yu, thank you so much. Very important updates with regards to that that important phone call. And as we head into a break, that is, we take a look at the market action in early Asia trade. Once again, you're seeing the Nikkei 225, the Kospi, and the TAIEX all up by about 1%, all smiles across these East Asian markets, but you're still seeing a bit of a down day for the Hang Seng Index. One of the standout laggards, stayed down by about 0.9%. Inside India, we'll be right back. Welcome back. You are watching Inside India, but we're going to take a quick detour to Japan right now because the leadership race for Japan's ruling party begins today. The LDP is looking for the successor to Prime Minister Shigeru Ishiba, and Lin joins us now with details with regards to this race that looks to be heating up day by day, Lin.
That is indeed the case, JP. The campaign period kicking off today, culminating in the election taking place on October the 4th. 5 official contenders, but really we are focused on 2 of them. Sanae Takeichi, the 64-year-old, she was also a former economic security minister as well, and Abe heir, a fiscal dove, versus Shinjiro Koizumi, who is the current agriculture minister and also the son of the former Prime Minister Junichiro Koizumi as well. They were also the last 2 candidates to lay out their vision as the Prime Minister of Japan. We heard from Takeichi, for example, there on Friday afternoon, kind of softening her tone to try and appeal to a broader audience, it seemed. When she spoke about fiscal expansion, for example, she said that it needed to be responsible. She sort of watered down her previous views that she was in support of consumption tax going to 0 when it came to food-related items. There was no mention in her press conference about the Bank of Japan, and it seemed like she was tempering her image. Shinjiro Koizumi was really focused on the renewal story here. He spoke about economic growth underpinned by wages growth, but really the key thing to watch out for in terms of Koizumi is how he does in the next 2 weeks, particularly with a number of debates coming up, because it was at the same time last year, during last year's contest, that his star started to fade because there were some concerns about whether or not he had the experience, the policy experience, to carry the country forward as the leader. And we did hear from Tobias Harris of Japan Foresight earlier today, where he said that basically this time around, the policies of these contenders arguably less important, given that whoever wins will need to deal with and potentially make concessions with opposition parties as well, given that this time around the Liberal Democratic Party does not have a majority in either houses of the Diet as well, JP.
Fascinating things, but Lin, you're also tracking market action after the Bank of Japan's decision to divest of its ETF and J-REIT holdings on Friday. Tell us what you're looking at right now.
Right. We saw on Friday, JP, that there was that knee-jerk reaction, right? The blue chips Nikkei 225 fell something like 1,300 points off the back of the central bank's announcement of this plan in terms of unwinding its massive holdings of ETFs as well as J-REITs. Today, we're seeing a very different picture with the blue chips index rallying actually 1.4% higher for the session. And this could be because, as some analysts have been speculating as well, that ultimately the unwinding of ETFs is in line with Japan's corporate governance reforms, that this is now undoing some of the kind of changes that the central bank has made. This is good for the free float and also maybe ultimately helping to restore investor trust as well going forward, JP.
And that's going to be very important also because to support some of the market reforms that were introduced that we're hoping to boost at least or improve the structure of markets out in Japan. Lin, thank you so much for those very important updates. And we are still counting down to the market open in India, and we want to take a look at how it's shaping up. A last look at futures right now. GIFT Nifty futures still foreshadowing a slight gain. It seems that we did go from slight losses to slight gains so far. It's trading just about 14 points above the Friday close when they did slip by about a third of 1%. The rupee looking a bit softer now at 88.16 against the US dollar. It will be a busy week for Indian IPOs with over 24 launching this week. Among them, brokerage Anand Rathi, Solar World Energy, and Sesha SAI Technologies. Uncertainty is emerging around the U.S. H-1B visa, and questions are also being raised about the fate of these workers who would have moved to the United States. Does this present a possible reshoring of skilled talent opportunity for India? Well, let's talk about it with our next guest. and approach this from the VC investing angle. Prashant Prakash is a partner at Accel, one of the VC companies with a burgeoning footprint and presence in India. And he joins us now to talk about all these things that might also affect the tech space and also investor appetites in India. Prashant, thank you so much for joining us today. I do want to start off with those H-1B visas because everybody's been asking about what it's going to do and whether or not it's going to be a boon or a bane for Indian tech, because we see that it might impact the operation of tech companies in the United States that depend on this talent. But again, this could also have an impact on the tech IT sector in India. What are your thoughts, given the VCs or venture capitalists that have a very unique angle at which to look at this, from look at tech and also economic moves in India, especially from the space?
Yeah, thank you for having me on the show. I think there's been a little bit of clarifications in the last 24 hours, and that has calmed the nerves on this H1 visa issue. I think there's been clarifications that it is only for future H1 visas that need to be issued. So nothing changes for the current people who are already on the H1 visa. So that has calmed some nerves. But from a medium-term perspective, you're right. I think this will mean that it's not going to be so easy for Indian folks who go to universities there and expect to graduate from universities and get into jobs in the US. But I think there is again another clarification that I've been hearing, that this will not. There will be some exemptions. I think what US is looking at is still retaining the flow of talent in their emerging sectors such as AI, deep tech, and some of those areas. And where they want to probably retrain and protect some of the jobs for the people in the US is in the slightly lower end segment. So I think because as an economy, they're so dependent on global talent, I think they will figure out a way to still get the best of the world talent to the US and make exceptions, is my own view. But from an Indian VC perspective, I think this is still a positive, in my opinion. I think there will be folks who will want to come back and work in startups in India. I think talent in startups, which has US experience and have product building experience in the US and cutting edge experience in AI. I think if some of those people can relocate and work in startups in India, I think that's a positive. And in general, I think we are starting to see that more people from universities, the best of the Indian universities who are graduating, are not so readily taking the US option. Mm-hmm. So, and I think the H-1B visa recent announcement is just going to add to that. So it's a net talent, less of a talent drain, I would say, from mm-hmm. India. So I think as a VC, I think there's more people to stay back in India and innovate, and hopefully more people coming back. And you've seen this trend in China. There's a lot more people who have moved back to China, and that's what built their innovation ecosystem.
So in that it actually might address some of the brain drain concerns that has plagued India for decades. But let's talk about a severe, not worst case, but severe case scenario where the H-1B visas are enacted and Indian nationals and high-skilled professionals have to come back to India. Of course, the talent pool widens, but is there an absorptive capacity in India's tech scene to absorb all of this talent? And could this actually make the cost of talent more expensive for startups that are looking to build in India right now? No. What are your thoughts?
No, I don't think so. I think, let's talk AI.
Sure.
I think in AI, there is, the foundational models, all of that is going to be in the US largely. I mean, there's of course a little bit of that foundational models, open source models coming out of China. But then you have the middle layer and the agentic layer, which is all the application layer of AI. I think that needs to be built for enterprises globally and specifically in the US. And I think India has had the talent that, and most of that agentic layer is going to be actually replacing service workflows within organizations. And that is very well understood by the Indian industry. So, and I think they will still leverage India, and some of these people would not be working in the US, but I think would still be working for global companies from India. Okay. So I think there will be absorption because any new wave, actually, while people say AI is going to replace jobs, maybe some of the white collar jobs that are not tech jobs, but people who are technology and product builders, I think there'll be a larger requirement for some of them to be built to be able to build this agentic layer across multiple verticals in healthcare, financial services. Right. Across the board.
Okay, Prashant, I'm glad you brought that up because this has been sort of a question that has been burning for me, at least. When you talk about Indian professionals, Piyush Goyal said that the world might be afraid of Indian talent. But it's always struck me that while the US and China have started to build out and use their tech talent to build out a space in AI, I wonder why there hasn't been an Indian DeepSeek yet. Despite all the talent that's there, despite all the positive capital and the fact that you can build things on that, do you think it's a question of the talent maybe not being able to catch up in AI, or do you think maybe the capital that's meant to support some of this is a bit too conservative? Share with us your thoughts as to whether or not India's underachieving here, because it would be a shame if they didn't, I think.
Excellent question. And I think here's where we need to kind of break up again what are the different layers of AI. And yes, the value of the AI ecosystem is a lot more if you can build the foundational models, which is the DeepSeek kind of models. Then on top of the DeepSeek model, you build applications, which is the agentic layer that I was talking about. And that, I think, India is very well positioned. So we will get a good share of the AI economy from India. But it's a very good question. Why aren't we able to build the DeepSeek kind of models or any of the
despite what you all have?
It's, I think, because these models require a lot of capital. They require $30–40 billion to be able to build some of these, and I don't think that kind of capital is there in India so far. Right. There's a second reason. I'll just complete that. The second reason is the research and the academia is not as strong as it has been in China and the US. For some of these frontier models in AI, it is not just tech capability, it is research, AI research capability, which China has built over the last 10 years and US over the last 20 years. And I think we are just starting to build now, and there's a new AI mission that has been set up in India with a few $1 billion. So hopefully in 5 years, but today it's lack of academic research capabilities and capital that is holding India back when it comes to the frontier foundational model layer. But the application layer, still extremely lucrative, and you can build large multi-billion-dollar companies.
So you're able to do the applications, but the foundation on which the applications are built on is what India needs to strengthen on, which will cost a lot of money.
Yes.
And that, how long would it take, actually? If let's say if India started now, how long would it take some of these very reputable tech schools? How long would it take them to catch up with the likes of China if you started today?
Yeah. So there is a good set of schools, as you know, and talent is not a problem. It's just that they were not focusing on this as a problem statement, right? And I think some of us at Accel and a few folks in the government are now seeding those open source movements within the country in some of the best universities such as IISc, the IITs, Mumbai, Delhi, Chennai. And we are hoping about 200 to 300 such research fellows will be seeded in the next 12 to 18 months. And I would hazard, it's anybody's guess, but my own guess is within the next 3 to 4 years, you will see some next-gen research talent that is globally comparable in AI that will emerge from India.
Prashant Prakash from Accel, thank you so much for joining us. Again, all these questions that we probably won't be able to sort out in a 5-minute interview, but we're glad that you at least gave us the broad strokes as to what might be holding India back from its potential. Appreciate the thoughts, sir.
Thank you.
And for joining us in today's session.
Great to be here.
Markets in Mumbai are about to open in about 30 seconds, but we'll dig into the early action when we come back in about 2 minutes alongside other stories with regards to India. Don't go away. You're watching Inside India. Indian markets have now come online about 2 minutes past the opening bell, and we're seeing the Nifty 50 doing exactly what Gift Nifty futures were foreshadowing at least about an hour ago. It is down by about 0.4%. If you recall, Gift Nifty futures were swinging between gains and losses, and this time around it shows that the color red suits it for the Monday morning. The rupee also weakening and softening today, about 88.16. Just a quick reminder for our viewers, 88.13 is the record week level, that is, for the local currency against the US dollar. So a bit of a sluggish start for Indian markets, whether it be equities or the FX space. But let's take a look at India's top IT players after the United States said it's imposing a $100,000 fee for its H-1B visa. The scheme could lead to a major overhaul in the sector, as more than half of its revenue is generated from the United States. We take a look at some of the stalwarts and the heavyweights here. Take a look at Tech Mahindra, down by about 5%. Persistent also matching it with a 5.1% intraday plunge today. Wipro, Infosys, HCL Tech, and TCS all not doing great. It's a bruising start for the tech space in India, and the impact and the uncertainty that the new H-1B visa regulation seems to have unleashed. Well, Manishi Ray Chowdhury is the CEO at Emer Capital Partners. He joins us today to help us make sense of what this will mean for the IT space and the broader Indian markets, actually. Manishi, thank you so much for joining us today. We're still trying to come to grips or come to terms with the recent H-1B visa regulations. At one time, we were wondering if it's going to be an annual fee or a one-time fee. We're wondering how it's going to impact IT services that are being exported from India to the United States. Talk to us about what the broader and worst blowbacks, potential blowbacks might be for this very important sector, sir.
Thank you. Thanks, JP, and thanks very much for having me here. This is the topic du jour, about the H-1B visas. So, I think the confusion that you talked about, that was cleared during the weekend, that it applies only to the new visas, not to the existing ones, not to the renewals. Having said this, I think this is also gradually, it's an attempt to do away with the H-1B program as it stands today altogether. If you do the numbers, the Indian IT majors, actually they're sort of second tier in terms of the total number of H-1B visa holders that they have. A bigger chunk is actually with the US tech majors like Amazon, and a few others like Google, etc. So what may happen going forward is obvious, the H-1B program, as far as the Indian IT majors are relying on it, would have to be whittled down. Companies would possibly get into conversations with their clients about offshoring a lot more of these people who are in the United States. That has two impacts. Number one, it would lead to a decline in the headline revenue that these IT majors generate, because offshoring is a high margin but low revenue activity. The net impact, we think, at least immediately in the immediate term, would possibly be somewhere between 2 to 4% as far as the earnings of these companies are concerned, which is getting reflected in the way these stocks are trading today. And we saw it partly in the US ADR market on Friday as well. But the longer term implication is actually more important, because as of today, it stands at, the new visas are not applicable, but the important operative word is today. Who knows what the US policy regime would be tomorrow? Would the renewal applications would also be brought under this restriction? We don't know. And I think given the situation, I think both the US tech majors and the Indian IT majors would have to brace for uncertainty going forward.
Manishi, let's talk about those long-term risks, actually, because as you mentioned, this could actually boost outsourcing back to India back to India. But again, there's also that bill that's being passed through U.S. Congress where they're proposing a tax on IT services that are offshored for U.S. firms. Do you think this creates a bit of a double whammy that the IT services sector will need to figure out and perhaps need to press regulators to give them more clarity on to avert any more of this uncertainty that they're seeing play out in the morning session?
Yeah. Now, this is, an interesting bit that, while the H-1B restrictions obviously mean that there would be more outsourcing on the part of US tech and India tech. There's another development that's happening, as you rightly point out, to impose some tariffs on IT outsourcing. But I would point out that that is actually difficult to implement. All these companies, look at Amazon, look at Google, look at anyone else, any of the US tech majors, they have offices and they have active development centers in India. Now, I think in a sense, it's difficult to actually define what is outsourcing and what is, generally, kind of a product development work that is going on in the offshore centers. It's difficult to actually at this stage say how the second bit, that is the tariffs on offshoring, how that would work out. But all in all, it seems that the US is clearly putting some kind of a spanner in the works as far as the business model of the tech companies, both US and Indian, have been working for many years now.
And Manishi, we are getting some flashes actually right now from India's NASSCOM. They're clarifying that the Indian tech industry is going to enhance local skilling and hiring in the United States, and they're going to spend more than $1 billion for this local upskilling and hiring. So again, these are some of the things they're trying to do to at least offset or perhaps safeguard some of their existing business relationships in the United States. Again, what more can be done actually on the industry side to actually perhaps avert some of these risks, or is clarity on this actually going to be the only antidote?
Policy risks are here to stay. As far as the US-India dealings are concerned, when it comes to tariffs, when it comes to these immigration laws, etc., it just can't be wished away. The only alternatives are more offshoring, possibly bringing more talent onshore into India. And second, also looking for other offshoring destinations. For example, Canada could actually turn out to be a big beneficiary. It's in North America. If you locate a significant population of your workforce there, they can easily come into the US to have meetings with clients. It's just a short duration flight away. People could look for other offshoring destinations as well, maybe in South America. So all these models would be thought about, all these models would be worked ahead going forward. We're in a very fluid situation. But of course, the longer-term problem with Indian IT, and I think that's something bigger than this, immigration or geopolitical issue is concerned, is that the basic business model is coming under attack from AI and the large language models. And that is something that they will have to contend with in a totally different manner.
And one of the things we raised actually with our guest a while ago, Manishi, is the ability of the Indian IT sector to absorb any Indian professionals or talent that come back to India because of these restrictions. Is there a capacity, and is this going to be a plus through deepening the talent pool for Indian IT? Should some of these professionals from the United States come back to India, or do you think it's going to be more complicated than that in terms of absorbing them right now? Just very quickly in about a minute, sir.
Right. So, it kind of works both ways. When talent comes back, obviously the average skill levels increase. But at the same time, India would have to find adequately compensatory jobs for these people. Mm-hmm. And I don't think that is actually happening right now.
Manishi Raychaudhuri from Emmer Capital, we thank you so much for joining us today to help us make sense of what the market and economic impact will be from these H-1B visas. And you're right, there's still a lot to iron out, a lot to try to figure out before anyone can make a strong move for or against this. We thank you, though, for your insights. That's helping us at least understand the issue better. Appreciate the time, sir. And that is all the time we have today on Inside India. But do keep watching CNBC because Access Middle East is up next. Have a good Monday.